Rakesh Arora is here with us to discuss metal stocks. Rakesh, good afternoon. Thank you so much for your time. The sector had become the darling of the market, be it HNI investors, institutional investors, or even retail. But some have been shaken out because of the correction. What are your thoughts on the kind of correction it is going through? Have the valuations become attractive?
Okay, so see, a commodity cycle normally runs for a few years, and we are already, like 1.5 year into this cycle. But I don't think we are at the end of the cycle as yet. And there are multiple cycles within the larger cycle. So we are just doing, a little bit of a blip. The larger trend continues. See, there are two, three things one needs to note. One is that demand globally has rebounded quite strongly, and this trend is going to continue because the economic recovery is still pretty unstable, given that we are seeing Delta variant, second waves, third waves come through, various countries. So both the government and the central banks are going to have a very cautious approach in pulling back any kind of support to the economy. So with that being assured, I think the demand outlook remains very strong. Number two, it comes to supply. There are two sides to it. One is that globally everything is working up to the full capacity. So when you look at steel companies, they're already operating at the 90% plus capacity utilization. Historically, we have not seen this in Europe and US. It's happening right now. The second part of the equation is China. China was growing very fast in the first half of calendar year 21, but now they have cut production because they have targets to meet on decarbonization. And that has created a little bit of flutter into the market, because when China cuts production, the demand for raw material, and largely it was iron ore, which had bore the brunt. So iron ore prices fell by 40% from the peak. But see, this is transitory because China can't really cut production forever if they have to meet their growth targets. So currently they are going through a seasonally weak period. Secondly, they have this second wave which has come through, and they
Allow
have
me to come in over here.
Also there's been some disruption.
Right. Rakesh, allow me to come in over here. So in this environment, where do you see, in this a bit of a corrective transitory environment, as you put it very nicely, where do you see best margin of safety and risk reward most attractive, given the kind of earnings which can pan out versus the prices they have corrected to?
So I think we are most bullish in the ferrous space on steel sector, commodity, as compared to say iron ore. And companies like Tata Steel, SAIL, who are fully integrated on iron ore, and they have access to a cheaper iron ore, because companies like JSW have bought some mines in the recent auction, but the cost of iron ore is very high. So Tata Steel and SAIL are someone who are the best placed in this kind of environment where the costs are already low and they're benefiting from high steel prices.
Right. And where would you put your bet on out of this three, or is it a basket approach which you'd recommend?
So see, most of the commodity stocks move in a pack. But as I told you that, among the ferrous space, steel companies which are integrated are our best bet. Coming to non-ferrous space, I think aluminum is one which is undervalued as compared to steel and copper. So I think, aluminum is likely to, move up further. And we have, three plays in aluminum. NALCO is a pure aluminum play and has the highest delta to aluminum prices. Remember that aluminum prices have not really corrected much at all, despite all this flutter. And the second is Hindalco is more a play on recovery in US, given their rolling capacities in Novalis. And Vedanta is a highly leveraged company, so the percentage change also is pretty high as compared to Hindalco. And plus there's a potential delisting which can bail out all investors probably in some in not so distant future. So I would say that apart from steel, aluminum looks attractive. NALCO is the most leveraged, and Vedanta would have more comfort because there's a ready buyer out available. who is looking to buy you out.
Right. All right, Rakesh, thanks so much for your insights on this space. Quite helpful for our viewers. With that, it's a wrap on the show. Thanks very much for watching. Goodbye.